We see in the ETF world smaller niche firms moving first to become market makers. Jane Street, for instance, is a top 3 market maker in ETFs. And Wall Street banks were kind of behind the curve. Do they risk falling behind the curve here with cryptocurrencies, and that's why they're getting into it quickly? A fear of missing out almost?
Well, yeah, I mean, there's a couple things to keep in mind. Number one, if you take exchanges like Coinbase or Binance, and they have 2 or 3% market share of crypto trading, their net income is going to be close to $1 billion this year. Goldman as a firm only made $8 billion in the entire last 12 months. So exchange trading of crypto as it is today in a small market is extremely lucrative. And that's why I think banks should get into the business. But here's something that people don't fundamentally understand. There's actually not that much speculation in crypto today. So if you
today compared to last year, you mean?
Or compared to other markets. So I compiled this data for a client recently. But if you look at the Bank of International Settlements for US dollar, right? The M2 is like 8 trillion or 7 trillion. The ratio of dollars traded across all exchanges globally to M2 is 141 to 1. So for every dollar in your pocket, plus the electronic money, it's traded 140 times across all these different exchanges, including all the desks of all these brokers. Commodities are, like oil is close to 40 times. Crypto is 4.
Really?
Yeah. So crypto on-chain versus exchange is 4 to 1. I mean,
well, but it's also in circulation as a currency much, much less. In other words, you use real dollars a lot more. You use real oil for stuff a lot more. So doesn't that kind of skew
crypto is, as a digital payment system, is actually surprisingly widely used. So there's a company called BitPay, which I believe is only 6% of all crypto payment services. It's going to do about 7 billion of accepted payments this year. That's a lot. I mean, for something that people say is worse than rat poison. I mean, it's been used $7 million.
But what are those transactions?
Yeah. Actually, so Christine Lagarde at the IMF actually made this point. She outside the U.S., most economies are decentralized. So, like, if you need to do payments to pay for a poem, this was her example, it's actually much easier to use a Bitcoin. Because it goes from Japan to France. If you use a money transfer agent, you lose 15%. Bitcoin, it just gets transmitted. So.
All right, so finally, I got to ask you the $25,000 question, because that was your year-end target for Bitcoin.
Oh, it's like a game show, you mean?
Yeah, that's. I mean, it feels like in crypto markets sometimes it's a bit of a game show. I mean, do you think?
I think it's completely reasonable. Yeah, I mean, so just consider this: at the, 25,000 says Bitcoin will make a new high by the end of the year, and it peaked at 20,000 a year ago. I think, or in December. I 100% think that's reasonable because, one, we know that by the end of this year, we'll have a lot more visibility on institutional activity, and everything you mentioned is pro-crypto. Outside the U.S., the regulatory environment's improving. There's exchanges launching. Bitcoin mining is also going to suggest crypto should be worth 25,000 because next year,
even with that increased supply coming to market that you were talking about.
Yeah, because the fully loaded cost next year for Bitcoin is going to be like 14,000 or something, with difficulty reflecting the difficulty. So if it trades at 2 times, it should be around 25,000.